Hey guys, welcome to the ARMR Report. It's Monday. It's the 29th of July. This is Fed week. I'm going to make this a brief ARMR Report today. I got a lot of things to get to. I'm sure you do. So let's just cover one particular aspect of trading/investing today. I'm going to reveal for you rule number 8 on my list of rules of the road. You can find this rule. You can find the blog post Rules of the Road on our website, rosenthalcapital.com, under algorithmic research. Now, before I get there, let's just cover some of the basics. This is a show about stock market investing for those of you who are new. All the information I reveal to you is information I use on my trading desk to manage my own capital. I'm not telling you what to do. I don't know you. So this is educational purposes. I'm talking to you so that you think before you click that button, okay? And I'm sharing with you 30 years of experience doing this to help you navigate through the rough water, if you will. So screens are all around me. Phone might ring. Forgive me, I might have to pick up. This is a live look into my trading desk. Quick update on algorithms, right? All of our decisions when it comes to risk management are created using our algorithms. These are proprietary algorithms. We have day trading algorithms and multi-day algorithms. Most of the time I talk about the multi-day strategies. We cover the top 6 indexes that drive our decision-making process. It's the S&P, the NASDAQ, the Dow, small cap index, momentum index, IBD 50. We use ETFs to trade these assets. Some portfolios, all we do is swing trade these assets using these algorithms. These are proprietary algorithms designed around statistics and probability. They're not designed around neural networks. We're not trying to be right 100% of the time. We're coming in right around the 77 to 79% success rate on all of these algorithms on average, which means let's say 78% of the time when we take a position, we get out with a profit. Okay? Our big position we took at the beginning of June, it's classic. We had all 6 indexes telling us to get risk on. That's when we stepped up. We've had a real nice run the last 2 months. Will the Fed meeting change that? We don't know. We have to see. Our algorithms don't care about fundamental stories, Fed meetings, or anything like that. We raise stops as we make money. We book profits on rallies at specific targets. Okay? And then we just read and react to the market. So there, I just covered the Fed meeting this week. I don't really care what the Fed says. I care what the reaction to the news is and how it affects the algorithms. We'll just have to wait and see. We'll have to be nimble. We don't try to top tick things here. We don't try to bottom tick things. Try to get that white meat in the middle. So what I want to cover then today is rule number 8 on this list. I just updated the list for you. You'll see in boldface what is the most recent addition to this list. Rule number 1 on the list, I always boldface because it's literally the number 1 rule that I follow before I ever click the button to buy or sell an asset. Am I on the right side of probability and statistics? And is the reward that I'm expecting big enough for the risk that I'm taking? These might seem like obvious thoughts, but I find people don't really go through this process in their mind. They buy shares of a company because it's a blue chip name. So their reward is market type reward and their risk is market type risk. And so what's the reason for that? I need the reward to be multiples of the market for me to take positions in individual stocks. Otherwise, I may as well just own the indexes. You follow me? So rule number 8, it applies to our favorite investing theme here on the desk. Those of you who know me and know this channel know that the cannabis investing super cycle is a major focus of our desk. It goes without saying that we've yet to make real money in that space, right? It's been a very difficult summer. I've been trying to share with you in the last month or so, the allocations in my portfolio of cannabis are either zero or very small. I hope you've been listening. Because what we want to have is a lot of cash to buy these stocks when they finally bottom out. And we don't know where that is. We'll use algorithms for that. We'll look for the right chart setups for that. We'll look for a crescendo of selling that wipes people out, and then a reversal. Until we get that, we might take shots here or there, but with very tight stops. I hope you're following me on Twitter, hashtag ARMR Report. I posted a chart of Cronos last week. I spoke about it last week on this channel. CRON is the symbol. I said to you then, hang on a second, guys. Okay. I said to you then, this group looks awful. This stock looks set up for the right risk reward entry point. Typically speaking, stocks follow the group. So it would be rare for Cronos to be able to outperform with the market imploding. The biggest reason for that is in the world we live in today, we have ETFs. They own the top big names. If those names go down, they all end up getting dragged down over a short period of time, unless there's a piece of news that changes the picture. So was I willing to take a shot in Cronos? Yes. What was my stop? Very tight. And I tweeted out this morning that we went through the stop early this morning. We've been out of the position. So we're not even getting hit this hard today. We were down a little bit this morning. If you're following me on Twitter, you would have seen that we had stops hit. I even posted a chart pattern for you to help you. So this gets to rule number 8. Do not ever, and I mean never, force your will on the market. Just because you think an idea is great doesn't mean you should hold the stock as it plummets. The market disagrees for whatever reason. Does that mean you're wrong long term? No. You could be dead on right. The stock could drop 50% and then go up 400%. And what I submit to you is, in my life, in the world I live in, I don't want my assets to drop 50% on the way to being up 400. I don't need to see that. I think most people can't even make it through that. So I don't force my will on the market. Do I believe the cannabis investing super cycle is alive and well? Absolutely. Could we have foreseen that a major licensed producer in Canada would lie to the public and the stock would drop 90%? No, we couldn't foresee that. This is why stop losses are so important. This is why you don't force your will on the market, because things change dramatically, specifically in a new investing cycle. So when CannTrust, when that announcement first broke, I came on here and did a bonus report for you to let you know how important that piece of news was. It's deadly for the space. Until it settles out, until that story ends and we move past it, it's dead money. And these stocks just keep going lower. No surprise. And if you're playing this right, you're happy about it. You got cash in here and they're killing the whole group, the proverbial baby in the bathwater. I think organogram is one of the greatest ideas ever. OGI, right? Stock is getting killed. Great. Bring it right down into me. I can't wait to buy that stock. I don't think they're violating Canada health laws, but the market right now doesn't care. They can't believe that a high-profile LP that did a huge secondary offering that trapped a bunch of institutions dropped 90%. So portfolio managers this summer are saying, forget it. I don't want to show I have those stocks in my portfolio. Not until this thing settles. And we're going to see revenue and earnings ramp in early 2020. Edibles come on the market in December. Then we should start seeing some fun results after all the planting that's going on right now in Canada. So we have this dead space. And I told you guys about this a couple weeks ago. So it reminds me, and I go to my rules of the road and I put up there rule number 8, do not force your will on the market. It's deadly. Okay, enough said. Let's skip right over real quick to another chart I posted today on the Twitter feed. It's a chart of Charlotte's Web. Last week, I got very uncomfortable. Look, this whole space is getting killed, so it's very hard for any of these stocks to go up. And last week, I got very uncomfortable when Curaleaf got the FDA warning letter. I'm still uncomfortable. I still think there are things that are on Charlotte's Web's website that look very similar to what the FDA didn't like about Curaleaf's website. But the news today that Kroger is giving Charlotte's Web a follow-on order to roll out over another 1,000+ stores, was it 1,300 something stores, is very bullish for this company, guys. Let me put it in perspective for you. Charlotte's Web had 4,000 retail outlets January 1. They now have crossed 8,000. What do you think that's going to do for revenue and earnings over the next 2 to 3 to 4 quarters? Maybe not the next quarter, right? Because they're just ramping. But over the next 2, 3, 4 quarters. I mean, it's phenomenal growth inside this company. This is a consumer packaged goods company. It's hemp CBD. The risk clearly is that the FDA drops a hammer and makes some ridiculous announcement that they can't sell their products. I hope that doesn't happen, and I can't invest worrying about that fear. What I can do is say, when a company is able to double their retail outlets in 6-7 months and is the premium product in the space, you've got to respect that. So let me explain to you how I run my money. If I see a group collapsing and I see my favorite stock take out its support, I go back to cash and I reassess. I don't mind doing that. If a story comes out the following week or the following day that reminds me I have to own that stock, I'll put the position back on if support held. That's how I run my money. I'm not telling you what to do with your money. You can hold through all the crazy swings if you want. You can sell and not buy back until the whole group bottoms. But for my money, there's one stock that I want to own in the space. And so I keep trying it. I'm still going to cut my losses if I'm wrong. But if a support area holds, and I published that chart for you today, take a look at where that support area is. If it holds, and they keep rolling out, Kroger's not going to be the only guy that does it, then we might have a very big stock in our hands. Okay, guys, I'm going to make this, like I said, brief today. So I'm going to wrap it up there. I got a lot of things going on. I hope this was helpful for you. Please go over that list of rules of the road, particularly if you're a new investor. These are hard-fought rules. I got tiger scratches up and down my back from 30 years in this business, and I'm sharing it with you. Rosenthal Capital, click on algorithmic research. You'll see rules of the road. Okay, guys, take care. I'll see you on Wednesday for the next update. If you like this, obviously don't forget to like it, subscribe, help me out. Let's get to 200 subscribers. and I'll share with you some more information about what I own in my portfolio at that moment. But we got to cross 2,000 subscribers. Let's do that. But let's get to 200 first. Okay, guys, thanks so much for your help. I'll talk to you on Wednesday.